I'm talking about what we are doing in the month of June. I'll come back to you and talk about what we plan to do in the month of July later. But in June itself, you can expect a number of decisions taken and implemented that will accelerate the process of economic reforms and spur investment in critical sectors. One of the things that I want to share with you is that this year we will not compress expenditure. Whatever has been provided in the budget will be made available to the ministries and departments, and I've encouraged every one of them to accelerate spending. I have the accounts for the month of April. Of course, April, it's too early to predict any trend, but I'm happy that both non-plan expenditure and plan expenditure are according to target. Non-plan expenditure in the month of April has been 6.9% of the BE, which is in line with the 5-year moving average. Plan expenditure has been 4.5% of BE, which is significantly higher than last year's April figure of 2.7% of BE. We will continue to urge ministries and departments to spend the money allocated to them. In fact, I'll be happy if they spend it early and spend it quickly rather than put it to the second half of the year. I've already asked ministries and departments to bring their proposals to the Cabinet or to the CCEA, wherever Cabinet and CCEA approvals are necessary, so that they can start spending quickly. Public spending, government spending will help the growth process, will stimulate growth in the economy. Revenue collections are satisfactory. Just as I said that I will not compress expenditure, I will also achieve my revenue targets. Revenue collections are broadly satisfactory, both in direct taxes and indirect taxes, and we will leave no stone unturned to achieve our revenue targets. So if we achieve revenue targets and are able to spend the money budgeted for, we will achieve the fiscal deficit target. 4.8% appeared too ambitious when I announced it in February, but having done 4.9% at the end of 2012-13, 4.8% is eminently achievable. In fact, some friends have urged me to say we'll do better than 4.8%, but I don't want to say that now. We will certainly achieve 4.8%. If it's better, so be it, but we will achieve 4.8%. There is concern about the rupee. I think the Chief Economic Advisor and the Secretary of Economic Affairs, I think it was day before yesterday and then yesterday, have explained what's happening. What's happening in India is not unusual to India. Countries with large current account deficits. Let me repeat this. Countries with large current account deficits have taken a hit on the currency. And these include South Africa, Brazil, Mexico, Chile, Turkey. Since India has a large current account deficit, the rupee is taking a hit. But I don't think there is any reason for panic. Please remember, between August 2011 and say July 2012, the rupee depreciated from about 44 or 45 to about 55 rupees to a dollar. Then from August 2012 to nearly the end of May 2013, the rupee was remarkably stable between 54 and 55. For nearly 10 months, the rupee was remarkably stable. Since then, of course, I believe due to a misinterpretation or a misunderstanding of Ben Bernanke's statement and some other factors, all countries with a large current account deficit have taken a hit on their currency. But that does not mean the rupee will continue to depreciate. The rupee will find its level. We are concerned about the volatility. I think steps are being taken to ensure that there's no volatility, but the rupee will find its level. And it's quite possible that the rupee will regain some of the losses it has suffered in the last few days. So I don't think we need to panic about what's happening in the rupee. Yes, it does put pressure on inflation. It does put pressure on the subsidy bill, especially for imported commodities. But I think the rupee will find its level. And I think the authorities will take measures to ensure that there's no volatility. The stock market, of course, continues to have ups and downs, like I find every other major stock market in the world. But again, that's a matter driven by sentiment of buyers and sellers. That doesn't mean that the underlying fundamentals of the companies involved have suddenly taken a turn for the worse. When the index rises to, say, over 20,000, it doesn't mean that the underlying fundamentals of the company have dramatically improved over a few days. The converse is also true. The underlying fundamentals is what we have to look at. When quarterly results come, half-yearly results come, that is what we should look at. And I think policy makers and policy commentators and policy watchers must always look at the fundamentals of the economy. Can there be any doubt that the economy today is stronger than what it was at about this time last year? Can there be any doubt that inflation is moderated in the last 12 months? Can there be any doubt that the fiscal position is better in the last 12 months? Can there be any doubt that the government has shown a greater sense of purpose in pushing investments in the last 12 months? Immediately after the Cabinet and CCA meetings today, the Prime Minister has called me, the CEA, and the Secretary Economic Affairs to review some of the matters that I mentioned. And I will request the Prime Minister to ensure that the decisions that I have highlighted, flagged, are taken by definite dates, preferably in the month of June. And I'm sure, with all our colleagues cooperating, we can take some of these decisions that are being deliberated upon long enough in the month of June. As I said, these concern the paper on coal pricing and coal allocation, the paper on gas pricing, the FDI limits and caps, skill development, and a few other issues. Now, yesterday, SEBI put out a press release. Now, before that, my real concern is the performance of three core industries: crude oil, natural gas, and fertilizers. Last year, the three of them recorded negative growth rates.